Hello, everybody, and welcome to another episode of the Capital Gains Tax Solutions Podcast, also streamed on Expert CRE Secrets Podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy. Using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to create and preserve more wealth. Defer millions of dollars of capital gains tax on the sale of crypto, businesses, real estate, ultimately unlock some freedom to make an impact and hopefully enjoy and build more wealth with your wealth. Each and every episode, we're joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas and deal secrets with us, so we can all learn more and grow more, and again, create and preserve more wealth. For those who don't know me, my name is Brett Swartz, and I'm founder of Capital Gains Tax Solutions. I'm also a commercial real estate broker, investor, and overall just love geeking out about tax, wealth, real estate, and anything to help you get an edge in today's world of ever changing strategies and plans. And so I'm excited about our next guest. He's out of the great state of Oregon. Been to Oregon. If you've never been there, you need to go. It's a beautiful place. And this particular gentleman is one of the founders of SMK Capital Management. And he, let me pull up his bio here real fast. He is focused on helping you create and preserve wealth with investment real estate, really cash flow and growth. This particular company, they underwrite hundreds of properties every single month. And they're also looking for opportunities to invest in about 5 to 10 per year. And he brings over 17 years of experience to the organization. And he started when he was in 2005, when he began investing in residential real estate in California and Florida. And throughout his entire career, he's been involved in sourcing, underwriting, acquiring, raising capital, rehabbing, managing, basically becoming a real estate expert. And he's going to help us today be a little bit more of an expert. Please welcome to the show with me, Mark Khuri. Mark, how are we doing?
Doing well, Brad. Thanks for having me.
Absolutely. And for our listeners getting to know you for the first time, would you give us just a little bit more about your story and your current focus?
Sure. Yeah. I was in corporate America for many years, Brett. I worked in finance and operations management. Those two experiences and skills meshed well for real estate investing. So I started investing on the side after work. Built a small portfolio, partnering with family members, brothers, parents, that kind of thing. By 2010, went full time, opened up our company, SMK Capital Management, and we've done hundreds of investments since. We focus today predominantly on really more of a private equity real estate investment company. Brett, we partner with sponsors and operators that we have established relationships with in different asset classes and offer our investors access to single asset deals and also funds that we create and customize, really focusing on income and growth in that order.
Fantastic. And, Mark, I believe we've been all given certain gifts in this life, and these gifts have been given to be a blessing and help to others. So I'm curious, what was that one or two gifts you believe you were given, and how does that help, how you help and bless people today?
Well, math is number one, I'd say, Brett. It's a big part of what we do every day. I think the second one is probably just attention to detail, very detail-oriented analyst by trade. And so I think maybe that's something that I developed or was given as a gift, as you said early on, one of the two. Either way, it helps us every day.
Beautiful. With that in mind, let's dive right into the topic at hand, which is cash flow and growth real estate investing. And by the way, if you want to learn more about Mark, you can go to smkcap.com. It's smkcap.com. So Mark, what is the number one secret to cash flow and growth real estate investing?
I think the number one secret is to find the right people and opportunities where you have a very high likelihood of earning the projected cash flow and growth that they're showing you. And that is what we do every day.
So let's talk about the right people to start, right? So how are you finding the right people? What's the number one secret to finding the right people that you can count on that are going to be bringing you the right opportunities?
Yeah, I think networking was a big part for me, Brett. Started networking in 2009 and 10, just meeting a ton of savvy folks in our industry, all with some type of special business strategy they have, whether it be asset class or region or you name it. And from there, starting to see a lot of deal flow. And looking at a ton of deals is very helpful to kind of gauge where you think the best opportunities lie, right? We probably pass on about 97, 98% of what we see just looking for something special out there. Usually there's a unique story, something very compelling that makes it stand out from all the other deals, which some of them are bad, some of them are fine, most of them are just mediocre in my view. And so we're trying to find something outstanding.
Fantastic. That makes sense. So sort of networking started with finding and understanding deals as you saw the deal flow and just, I guess, putting in what's called the 10,000 hours, right? I imagine looking at so many deals, you're going to start to find the patterns, see the patterns, right? Pattern recognition of what's going to make sense, what's not, what to say no to, what to say yes to. Before we dive into some of the unique stories that you're seeing in today's marketplace and something that's actually compelling to buy and invest into, what would you say is the next secret to cash flow and growth real estate investing?
I mean, diversification is a big one for us, Brett. We spread capital across different operating partners and sponsors, different regions, different asset classes, and even different durations and terms of investment. So the cash flow keeps coming in, and even if maybe some assets might be underperforming, you might have others that are overperforming and others that are just in line with projections. And so the net is to continue to keep going and hitting your numbers.
You know, I always thought it was interesting. Like the financial world says that the alternative is the real estate, right? People, right? And that's for alternative investments. And it had like an idea that perhaps are more risk involved, right? And they're like the traditional, more conservative investments. Talk about I guess for those who have been in real estate the way we have for so many years and seen so many deals and the idea of I like how you said diversification, different asset classes like a mobile home park or a multifamily or an industrial in different geographical locations, or maybe it's some lending on some commercial real estate assets. Talk about that overall just concept of moving what I think is the primary way to build wealth, right? That's the most risk adjusted, I think mobile home park, multifamily, industrial, right? Those are some of our favorite food groups for real estate, but just that overcoming people that perhaps came with a more traditional stock market approach.
Yeah, I mean, you kind of nailed it, right? So by spreading out your capital, by diversifying, you can ultimately create multiple streams of income, which I think everybody wants, and growth. And so we believe in that wholeheartedly, Brett. It's a big part of our investment thesis since day one. And so we've basically just created different investment offerings and funds over the years with always with that in mind to be able to share that concept and strategy with our investors as well.
Excellent. So let's dive into some compelling and unique stories going on, right? Because 2023 was kind of I think a really odd year for a lot of reasons, especially because interest rates went so high and sellers' expectations were perhaps in the 2022 prices and buyers were in 2024. And it's kind of a little more of a stalled transactions over the year. So A, did you find any compelling stories in 2023? B, what was it and how's it looking so far?
Yeah, great questions. I mean, we looked at a ton of deals in 2023. We invested in a handful. I can give you some examples. Maybe that's the best way, Brett. Like, hey, here's a deal we recently did. I'll give you a few, and I'll go through the first one kind of quickly. There's a self-storage facility an hour outside of Houston, Texas. Our operating partners found this one through their acquisitions team. They have a team of 6 folks that just cold call all day long, self-storage and mobile home park owners. They've been doing that for over a decade. And so they have a pretty amazing Rolodex of being able to get deals direct from seller. I went and visited the property as part of the diligence. I plugged the property into my Google Maps, and it took me to a completely different self-storage facility because Google Maps was wrong. And so when I finally got to the property, you realize, what's going on here. It's a mom and pop seller. They're in their 80s. The husband recently passed away. The wife is no longer operating it properly. They're not doing any marketing online, which is a huge, I would say, mismanagement plus for an acquisition, because you can quickly adjust revenue and occupancy just by getting a presence online. And they hadn't raised rents in years. And so I think the average 10 by 10 there was around $80 a month, where the local market was over 130. So that was a pretty exciting one. Just the fact that I couldn't find it in the first place. You see this human error concept that sticks out. And if you can source opportunities with human error that you think you can cure and fix in a short period of time, you tend to see the value of the asset go up rather quickly.
Yeah, absolutely. I mean, that's a pretty compelling one, right? It's yeah, old processes or tired processes, tired landlords that are, quite frankly, satisfied perhaps where they're at, keeping the rents low, keeping people in there, not having to do a whole lot of work, and they're ready to harvest. They're not looking for all that, massive cash flow perhaps that they were relying on when they were building it up. And you're going great. It's time for you to harvest. Time for us to replant. With new systems and processes. Is that a fair summary?
It's exactly right. Yeah, again, you're in the people business, so you're dealing with people who are the sellers and people who are the buyers, and making sure that everybody in between is on the same page as to what's the strategy, how are we going to improve this asset, what specifically can we do to grow NOI, right? And so that's always the goal.
Got it. And so your model, by the way, just so I understand it, is like a fund to fund model where you're finding the people that are tying it up and then or JVing with you, or do you do a little bit of mixture of both? Walk us through how someone might want to work with you to say, look, Mark's curated the best of the best across the country. He's either direct JVing with them or raising capital with or for them. Walk us through what that looks like.
Yeah, it's both, but depends on the operating partners that we're working with, the deal that they have, or if they have a portfolio, depending on the size of it. We will create a specific entity for investment and direct the dollars into that investment from our investor group, and then close that investment to new capital. And so predominantly closed-end funds, fund of funds. We also do single asset investing. It really just depends on the ebb and flow of the deals, where we think we want to place money.
Okay, good. Anything that's compelling right now, or do you feel like 2024 is finally going to be the year? My belief is it's going to be the best year to buy that we've had in maybe 5 or 10 years, right? At least. And perhaps it'll be the best for the next couple of years, especially. Like, what is your thoughts on 2024 versus 2023?
Yeah. I mean, we started seeing some pretty good discounts to peak pricing in 2023, anywhere from 20 to 40% off on some assets over the last 12 months. I think we'll see some more of that, Brett, like you're noting, in the next, call it, couple quarters here, or in early January of 2024. So it is definitely a good time to buy, in my opinion, but it's also very hard to buy. We're still in a situation where a lot of going in cap rates are lower than the borrowing rate, and you have a negative leverage type situation starting from day one. We tend to avoid those deals. We're really looking for positive leverage day one, where there's a nice spread of 100 to 200 basis points, or 1 to 2% between the cap rate and interest rate. And so that allows us to usually start off with positive cash flow on a lot of these deals. And they're just really hard to find today. But I think we'll get more of that. We'll see what the Fed does in the coming quarters here, if they will lower rates or not. But you also have this psychological shift that's already occurred just in the last, I'd say, month or two, between buyers and sellers. With the Fed, they haven't raised rates since May of 2023, and they alluded to in their December meeting that they're likely to potentially consider rate cuts in 2024. So now, there's been a big discrepancy between the bid ask, between what buyers want to pay and what sellers are looking for. And that's caused transactions basically to stop on a lot of sectors. And so I think that will change now that buyers know what their borrowing rate is likely to be in the next 60 to 90 days. They can underwrite a little bit more accurately versus just padding the heck out of everything, and maybe get that bid ask spread a lot closer where more transactions will happen. And there's a ton of money sitting on the sidelines, Brett, trillions of dollars, literally. Just reading an article 2 days ago about how much money is sitting on the sidelines to be deployed into real estate, commercial real estate, in 2024. And so you have a lot of other things going on as well. There's a ton of debt maturing in 2024 and 2025. We'll see if there's going to be a wide range of loan modifications where sellers won't be forced to sell at that time. Perhaps they can extend. We've already started seeing that across different assets in different sectors of the country. And if that does occur on a little bit wider scale, I think you'll see less distress than maybe we're all anticipating or projecting. And then you also have, capital being injected into deals. If there is a light at the end of the tunnel, if a deal's in trouble and you have enough time and you have enough capital, a lot of folks think things are going to probably get better from here on out. So we'll see where it goes.
I think it's a great summary. I couldn't agree with you more. It also, yeah, if it really feels like buyers having certainty to execute with dependable financing has been a key component here. I also think on the other side, sellers have uncertainty that they can do something with the capital that would make sense, right? I think a lot of people were not selling because they didn't have a great exit plan. Where are they going to go with the money? If they say it's the mom and pop who, and the husband passed away, maybe they got a stepped up basis or a partial step up for the self storage deal you're talking about. But if they didn't have that, they're going to get hit with massive capital gains tax, or they're going to have to force themselves into a 1031 with the marketplace that was uncertain with interest rates to cap rates, right? That probably like a negative arbitrage, like what you're saying. I feel like a lot of cap rates that we have seen last year were at a negative arbitrage. Obviously, second half of the year started to change more, and that's why I think in 2024 is going to be solid here for those because people are going to need to sell. So, talk about other creative ways that you're structuring deals to make it a win-win for the seller when they exit.
Yeah, I mean, sometimes there's assumable debt, Brett, which is helpful, of course. Those deals are harder to find. One of the things that comes to mind I think is worth sharing, is an asset class that we've been investing in through 2023, triple net or absolute triple net industrial sale leasebacks. So a bit of a mouthful, but essentially we found this sector to be quite appealing for a couple of reasons. But before I get into that, like what is it? So you have typically a manufacturing business that owns and operates an industrial building. And a lot of times they're getting acquired by private equity companies. But the private equity company doesn't want the real estate. They're acquiring really the operating business. And so they'll sell the real estate and continue to occupy the space and the real estate as a tenant. So what you have here is a situation where if you're acquiring the real estate, usually you'll see 20-year leases put in place with escalation clauses on the rent. So the rent goes up every year between 2 and 4%. That's part of the lease. And it's absolute triple net. So the tenants have to pay for all the expenses, the property taxes, the insurance, repairs, maintenance, utilities, etc. Why is that appealing today? Well, for us, you asked it based on the seller, but the seller is looking for a capital injection. They're looking to get rid of the real estate as a part of their balance sheet and just have the business. A lot of times they're re-injecting those proceeds right back into the business to grow it further. And from a buyer standpoint, from our view, we love it because the idea of stagflation is very much top of mind today, where you have flat or slightly increasing rents, but you also have expenses that are increasing at a higher rate than your revenue because of inflation, right? We've all seen that. You've seen it. Utilities, payroll, taxes, insurance have all gone up drastically in the last couple of years with inflation. And so to combat the idea of stagflation, where your net operating income is essentially flat or declining, these types of assets help out very much so in a portfolio because you have growing revenues with rent escalations every year and zero expenses. And so we love that as a part of a portfolio and part of an investment strategy.
Got it. Let's walk through that for a second. So what's the average cash on cash return for that if someone were to buy it for, all cash 5 million for one of these?
Typically it's between 7 and 8% year one.
Excellent. And then is that taking on debt or what's the cap rate?
Yep. Cap rates, I mean, they've expanded a bunch in the last couple of years, Brett. Again, why we think it's a good time to buy. But we've seen on some of these deals over 200 basis points of cap rate expansion, where you're going from maybe it was a 6%, now you're getting it an 8%, that kind of thing. And then borrowing rates have ranged between 5 and 7%.
Okay, excellent. And then are you buying are these already existing businesses that are existing buildings that have been around for 20 years? Like what's the average age of these? Just kind of curious on that.
Yeah, it's right around there actually, 20 to 30-year age buildings, but again, industrial. They've been occupied oftentimes by the same tenant for many, many years, and they're going to continue to stay there. So you have 100% occupancy at time of acquisition.
Okay. Yeah. No, I love industrial. It's our industrial, especially if it's like industrial warehouse. And there's some like flex space too. Single tenant can be also nice if it's the industrial space has been red hot, and I think it's going to continue with everything going on. So those are also safer. I have a hard time for people who go 1031 into like the Walgreens or the CVS's, right, or that kind of thing, because I just feel, or restaurants, right? I just feel like that's just a lot of risk given what's going on in the marketplace. But industrial, I like a lot. I do. I like multifamily, mobile home park, industrial. So good. Mark, any questions I haven't asked you so far that I should have asked you?
I mean, we could talk about tax exempt apartments if that's something that you're
Yeah,
interested
let's dive into that. That sounds cool.
That's another, I would say niche asset class, Brett, that we've been focusing on for a couple of years now. Basically, what it is, these apartment communities that we focus on are already stabilized from an occupancy standpoint, usually 90 to 95% occupied when we're acquiring them. And they're exempt from paying property taxes. So in Texas, for example, you have one of the highest millage rates in the country. 2-3% is pretty standard. And so if you can avoid paying that expense, it can be very, very beneficial to the bottom line. So that's another strategy we've implemented. We're usually investing in relatively newer vintage in Texas. We invested in a property that was built in 2022. Really nice asset, and implemented the tax exempt strategy while in escrow. The seller didn't have it before, and earning positive cash flow.
Is that like the low income, like housing credit type of thing, or is that something else?
Something else. So what we're doing is we're keeping 50% of the units tied to the local area median income. So they're income and rent restricted. So the rents can essentially only go up so high, but people still need to have a job. They still need to apply for the housing, but you're opening up and creating more affordable housing, affordable by definition, right? You're looking at the local area median income, and you take a percent of that, and that's the limit of where the
Got
person's.
it. What's the percent of that? And then two, how long do you have to be restricted for?
The percent can range. It can be anywhere from 60 to 80% of the AMI. And then it adjusts annually, Brett. There's no time frame where it has to be restricted. You just have to keep 50% of the units restricted.
Got
But
it. And the moment you stop doing that, then you lose that 2 to 3% property tax exemption.
yeah, the property tax exemption is good for 99 years, and it's transferable to the next owner, but you have to keep in compliance where 50% of the units are rent or income restricted. And I'll put it in context. Like, what does this mean? It's like, so on one property, we projected that in the first year, we're going to lower the rents by 250K annually. And for that, we receive a property tax exemption of over $1 million annually. So the net to the bottom line is pretty massive. And so you have a very nice positive cash flowing situation and valuation growth.
And I bet you the tenants were happy, right? I mean, they get a rent decrease. Is that what you did? You said, "Hey, everybody, congratulations." Is that what you did?
It's a rolling kind of process, Brett, when rents come up for renewal. And so,
Got it.
and if vacant units are at the property, you lower the rents and what those are you're asking for.
Man, if you can get 750,000 over a 12 or 18-month period in NOI straight to the bottom line, yeah, that's powerful. I see that. I see that. So that's compounding interest right there, almost immediate, without any like CapEx, huge, influx of cash to make that happen. Awesome. Well, Mark, this has been great. Are you ready for the lightning round?
Let's do it.
All right. Knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget make sure you tell yourself to do?
Work harder, play a little less. Not completely less, but play a little less.
Cool. What's the biggest frustration with the 1031 exchange if they want to go into a syndication or a fund like yours?
It's difficult. We're essentially selling securities, not real asset property. And so it becomes complicated. You have to have a tenancy in common or a joint tenant common structure, and that makes it a bit hard. So we have essentially hindered away from that in our investments, unless we have a single investor looking for something specific that is meaningful. But usually we're looking for 500K plus on those kinds of investments.
Yeah, let alone it also doesn't accept, businesses or crypto or stock or primary home exits. You can't 1031 into a tick or into a you can't 1031 at all with those type of assets. By the way, we have a solution for that. We call it the best 1031 exit plan. Go to experttaxsecrets.com to learn about that. Works for any asset of any kind, and you don't have to do a tick, and you can go for crypto or business sales. You can also save a failing 1031 exchange, and it can go right in with a group like Mark to invest passively, diversified, keep some liquidity, get some diversification. It's called a deferred sales trust is the strategy, but you can go to the best 1031 exit plan is the product, experttaxsecrets.com, also capitalgainstaxsolutions.com. Next question, Mark. What would you say you're most curious about right now?
I think two things come to mind, Brett. I'm looking forward ahead into 2024 because we're in January. So this is where you start to ponder and plan, et cetera. Number one, I think, is, tensions in the world. Wars seem to be escalating in different areas of the country, excuse me, the world. I hope that they don't become much larger and the US gets tied into them. We'll see what happens. A couple other things on my mind, just these are concerns, I think, is just what's going to happen this year. It's an election year, right? Historically, election years, if you go back the last 9 election cycles, it's always been positive GDP growth. And so is that going to happen again? Is the Fed going to lower rates? Is there going to be any pressure from political influences, et cetera, to do so? We'll see. So that's also top of mind.
Yeah, well said. Second last question. The number one way you're using Chat GPT.
I am not using it.
Okay. The number one reason you're not using Chat GPT.
It's just another thing I got to learn, Brett, and
Okay.
not at the top of my list at this point. I mean,
Yeah.
some of our operating partners are using AI software at their asset and property levels, and we like to see that significantly helps in a lot of different areas. But personally, I don't use it.
Okay, right on. Is there any AI that you're using in your business that you feel like is really cool?
One that a lot of our sponsors and operators started using is Snapped, SNAPPT. It's a fraud detection software for applicants looking for housing, particularly. We've seen a huge uptick in fraudulent applications over the last couple of years, Brett, across different regions, different asset classes, you name it. And so this is a relatively newer software that is AI focused and can detect, fake paperwork, or I should say, altered paperwork. Because a lot of people will find a way. I mean, there's stuff on TikTok that teaches you how to change your pay stub pay amount. It's a little crazy, but that's happening.
Wow, good to know. SNAPP?
T at the end.
Oh, SNAPT. Got it.
SNAPPT.
PPT. Okay, got it. All right. I'm
They
glad.
couldn't have made it harder, I don't think, to figure that one out.
Yeah, well, that's why we did it twice there. So excellent. Last question, Mark. After all your success, helping all the people you've helped build wealth, create wealth in real estate, what would you say is the number one way that you stay centered in your values and stay encouraged to charge forward for reaching even higher heights?
It's a bit of an internal drive, Brett. I can't say there's one way or one reason that causes it, but I mean, I wake up every day trying to stay sharp, reading, 1 to 2 hours every day, as much as possible to stay on top of trends and what's going on and opportunities. And that then sharing that kind of information, research, analysis with our investors so that they can also participate and grow and have multiple streams of income.
Fantastic. Mark, I want to thank you for being on the show and thank you for sharing your wisdom with us. I want to thank you for your attention to detail and to cash flow and using the gifts of math to help people create and preserve more wealth in real estate investing. For our listeners who want to get in touch with you, would you mind one last time, what's the best place for them to find you?
Yeah, I mean, they can register on our website to see our investments. Our website, again, is smkcap.com. And my email as well is info@smkcap.com.
Amazing. Thank you, Mark, for being on the show. And I also want to thank our listeners for listening to an episode of the Capital Gains Tax Solutions podcast. Also stream on Expert CRE Secrets podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to exit highly appreciated assets. We are just launching the best 1031 exit plan. You can go to experttaxsecrets.com for that. We have a saying around here: friends don't let friends do a 1031 without a backup plan. So you want to make sure you have that backup plan in place. And or if you're selling any other asset of any kind, it has $1 million net proceeds, $1 million gain, go to capitalgainstaxsolutions.com and get started today with building a capital gains tax exit plan. Don't forget the book, Building a Capital Gains Tax Exit Plan, as well. Boom, it's all there. YouTube, Amazon, our website. Get started today. Appreciate everyone